But normally when I have people on and we talk about when the recession is coming, if the recession is coming, they're always punting end of next year, beginning of the year after, etc. For you, as someone in restructuring, recession is potentially good news for business. So when do you think it's coming?
So as an eternal optimist, I always think distress is just around the corner, but that might not meet most people's needs of optimism or definition of optimism. Today, we see no signs of distress on a broad-based basis in the markets. We do see pockets of opportunity, idiosyncratic risk, or certain industries that are going through kind of turnaround and crisis, and that's where the opportunities have been. But if you ask me to predict today, do I see distress? While there are some indications that perhaps distress is creeping into the markets, we don't see it happening in the near term.
Okay, so which indications and in which industries?
There are certain agencies out there that are keeping track of credit ratings, downgrades. You can actually see it in the markets with respect to interest rates and the way bonds and distressed loans trade. And you see those indications creeping up. The weakest links, for example, are out there and are growing. You have distressed ratios that are growing, and we can clearly see where the opportunities are. From an industry perspective, I think we all know about retail. I think we see it spilling into consumer products. We're seeing it in the TMT space. We're seeing it creeping slightly into auto with an expectation of declining SAR and just changing dynamics in that industry. And we've seen it in pharma, both from a litigation standpoint, but we've also seen it in healthcare and pharma from just the changing market dynamics.
Let's just focus on retail for a moment. It's the season for them, if you like, with our Christmas tree just going up, everything is
the season.
Yeah, right. First snowfall, 'tis the season to be jolly. Maybe not for retailers, though, because Christmas has been horrific for them the last few years. Is there a sense that this year is going to be any better?
So early indications are that it will be a good Christmas. You can look at what was reported over the holiday weekend. It's just the shifting channels that are making some have, and some will succeed and some might not. And so for retail as a category, I think it will be a good Christmas season. However, not all participants in that space will fare the same. Clearly online, and online retailers and those who've taken advantage of the online opportunities will do well. Those who are still a little bit stuck in the bricks and mortar and haven't captured the online presence will continue to struggle.
What about tech? Because that's not an industry we have usually paid a ton of attention to in terms of restructuring, but we are now seeing this interesting trend where companies that even 3 or 4 years ago were sort of darlings of the stock market today are almost valueless because the velocity of change or the rapidity of disruption has been so great that their business model just ceases to be viable. How does that play out, and what opportunities are there for restructuring bankers there?
So we really are seeing and have a few mandates in-house that are tech-focused. The pace of change, as you've said, has really created more and more opportunities, which mean many tech companies have been left behind. You have online kind of, telephony companies trying to migrate into the cloud, trying to enhance their enterprise-based businesses, while others that are better capitalized and with greater resource of kind of investing in those businesses. And we see that change. You saw it with TVs years ago, and that change will continue in the business with business solutions and enterprise software. But that opportunity, that pace of change in the tech world, with those getting bigger, getting better, and having more dollars to throw at the opportunity, will clearly leave some tech companies behind, and we've seen that happen.
How does that change the process of restructuring a company when that change occurs so much faster than it has done traditionally in all industries?
So the process is always the same. The real fundamental issue is there a base viable business there? Or are there patents or other assets that might not be visible in the performance of the company that could be attractive to other parties? But when the business is not viable, most restructurings require someone to believe in the turnaround and perhaps invest money a second or even third time around to capture the upside. But if no one sees that upside, then it makes it that much more difficult to turn around those kinds of companies.
Now, arguably the biggest restructuring in the news at the moment is PG&E, the Californian utility, which seems to sort of roll from one crisis to the next. Now, I know you're going to be slightly restricted in what you can say. You guys at PJT obviously closely involved there. But let me ask you this. It's one where there is a significant sort of overlay of government and restructuring. How does having so much political interest around the process change not only the outcome, but perhaps the kind of advice you'd be giving?
So the advice doesn't change, but all restructurings have multiple parties at the table. And I can answer this question that's not really just specific to any one particular matter like PG&E. There are always a number of parties from a creditor, management board, investors, and so on. This just adds another party to the table who have their objectives and their motivations. And I think, like in any restructuring, you just have to make sure you're sensitive to what the needs are of the political bodies as you navigate through what is a financial restructuring.
But that implies an ability to actually read political will, which at the moment no one seems to be able to do.
So I'm not going to delve into what's important in that regard, but like anything else, everyone has an objective, which is to solve the problem, to fix the company, to fix the Commonwealth or whatever other entities under that kind of restructuring, in that kind of restructuring, and you just have to be sensitive to it.